Okay, so welcome everyone. My name is Clive Cousins, and I'm going to be teaching you the basics of trading today. So it is very important that you've completed the 100 and 200 series in order to follow properly. Please type any questions you have in the chat, and I'll look at them when I have a moment. We have three main things we're going to cover today, and that is how to calculate pips and therefore calculating your lot size. Then we're going to look at closing partial trades and trade management. And then I'm going to give you some quick tips on how to use TradingView. I am going to mute all of you if you don't mind, just to make sure that there's no background noise. And on that note, let's begin. So I'll start by sharing my screen, and we'll start with the whiteboard. So guys, in order for this session to work, I need you to open Metatrader on your phones right now. And I'm just going to drop down a few prices of some currency pairs. So we have AUD USD, current price is 0.77467. And I need you to know that most currency pairs have 5 numbers after the decimal point. If you look at your MetaTrader actually makes it easier to understand what I'm about to show you next. The last number is called the pipette. And this is a digit that we completely ignore when we are calculating pips. So I'm just going to move it to the side for now. So when we look at AUD USD, we imagine that the price is 7746. Now, guys, I want you to help me out with this. Remember, this is more of a revision for those of you who've completed the 100 and 200 series. But if I am buying AUD USD, will my stop loss be above this price or below this price? Feel free to write your answers in the chat. Below. Very good. So let's imagine, guys, that I want to have a 15 pip stop loss on AUD USD. What should my stop loss be? So this is the full price, okay? What should my stop loss be if I want to use a 15 pip stop loss on AUD USD? Could you put your answers in the chat, please? So 7731. Correct. If you want to be even more precise, it would be 77317, right? Because we completely ignore the pipette, but we bring it back when we take the trade. So if you look at your MetaTrader 4 app, it actually helps you because it makes the pipette really small and it makes the next 2 digits big. And 46 minus 15 is indeed 31. So good. Now let's say we want a take profit on this trade of 40 pips. What is my take profit going to be? Correct. 7786, and to be precise, that extra 7. Good. 77867. That's it. So all we're doing is we're adding to the entry for our take profit since we're buying, and we're subtracting from our entry for the stop loss also if we're buying. The same is true if we're selling, okay? So if we sell, we just flip everything on its head. If we're selling, the stop loss will be higher in price than our entry, and our take profit will be lower in price than our entry. So I hope that makes sense and we don't need to dwell on it too much. Now, most currency pairs have 5 digits after the decimal point, but not all. So now I invite you to look once again at your Metatrader and look at this currency pair, USD JPY. Now this time let's give an example for selling. So current market price on USD JPY is 109.155. So notice now we only have 3 digits behind the decimal point, not 5. But the same rule applies. So what we're going to do first is we're going to remove the pipette from our calculations. Okay? So we are selling USD JPY and I want a 20 pip stop loss. What should my stop loss be if we are selling USD JPY? $109,355. Very good. Excellent. So because we're selling USD JPY, our stop loss is going to be higher. I did say a 20 pip stop loss, and 15 plus 20 is 35. That's 20 pips. All we need to do is add the pipette back at the end. And our take profit on this one will be 50 pips. What's my take profit on this? Very good, Kevin. Very good. So it is 109.655. Sorry, 108.655. How did we get that? 15, well, 915 minus 50 will get us to 865. Very good. So what I want you to learn from this segment is that most currency pairs have 5 digits behind the decimal point, but any currency pair traded with JPY in it only has 3 numbers behind the decimal point. The only thing that changes is the fact that there are 3 numbers instead of 5. We're still going to remove the pipette for our calculations, and we're going to put it back at the end. But that's about it. Now, next on the list is gold. So gold has, where's gold? Gold has 2 decimal points, 2 numbers behind the decimal point. So entry price on gold is 1870.01. Let's make it 00. Current price on gold is 1870. Now let's say I want to, shall we buy or sell? Let's do another buy on gold. So we're buying gold. There's the entry price. I want a 20 pip stop loss on gold. Was that an answer or a question, Kevin? It was an answer. A 20 pip stop loss on gold. And that is the correct answer. I'm surprised we didn't have any other answers. So yeah, we're going to remove the pipette, the last digit. So we're left with 700, yeah, minus 20 will be 680. Remember that the only mathematical thing about trading is plus and minus for the most part. And we're going to have a take profit of 45 pips. What's that? Should be easy. No, no, yes. Yes, Carlos, this time you get the right answer. You get the cookie. So it's 1874.50. 1915. No, 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 no. 45 pips. Remember that we removed the pipette. So if we had to add 45 to 700, it's 745. And then we bring this back. So remember, guys, it works in the same way. All you need to do is just look at it, and one day it will make sense. You remove the last digit, and you're left with 2 or 3. Up to you how you want to make the calculation. If I'm only, in this case, we had a 15 pip stop loss, so I can do 46 minus 15 to get 31. Yeah. In this case, we remove the pipette, and we're dealing with 915. Remove the pipette. What did we say? A stop loss of 20 pips. So we had to add 20 to 15, and now we've got 35. Take profit in this case was minus. So we said we had a, what was this? A 50 pip take profit. So can we deduct 50 from 15? No. So we need to bring in the 9. 915 minus 50 gets us to 865. Does that make sense? Okay, yeah, she realizes her mistake. So that's good. And when it comes to gold, same thing. We simply remove the pipette and we see what else we can work with. Don't let the decimal point get in the way of your calculations. This is what we do. Then you highlight this. So it's 700 minus 20 gets us 680. 700 plus 45 gets us 74.5. So I hope that clarifies things and makes it easier. If you have any questions, please drop them in the chat. And if not, we can move on to the second part, which is calculating your lot size. Now, before we get there, let me stop sharing this and stop sharing this. And I'm going to start sharing this. So guys, let's imagine now that you're watching an educator or you're taking your own trade, okay? And you need to identify, first of all, what sort of trade you're going to take. So let's say that I want to sell Euro USD. Incidentally, my charts are already set up for this. Too late now, I'm done for the day. But I'm going to show you more about TradingView later. For now, I just want to hypothetically drop a trade like this. So we're selling Euro USD. Now, what do we see here? First of all, we have our stop loss. This is the red zone is our stop loss, which means that if price goes against our analysis and comes back up to here and gets to this point, our trade will close automatically and will have lost money. If, however, price continues going down and hits this part, our trade will also close automatically and will have made money. So this is how trading works. Now, why is this important? Because before we enter a trade, we like to see where we expect the market to go and at which point we're ready to cut our losses. It's as simple as that. So I'm just trying to delete what it's doing, get rid of them there. Let's drop this again, my mistake. So in this case, we said we're going to have a 20 pip stop loss, more or less, there, and a 40, whatever. Let's make it 50 pip take profit. So take a look at the screen. I now know that my stop loss is 20.3 pips. I also know that my take profit is 51.8 pips. What does this mean? Well, this means that I stand to make over double what I'm prepared to lose. Let's lower this a bit just to get a risk to reward ratio of 2, something like this. So look, the position actually shows me my risk to reward ratio. What does this mean? It means I'm risking 20 euro for 40. It means I'm risking 100 for 200. It means I'm risking 500 for 1,000. Now, how do I know I'm going to risk 20 to make 40 in this trade? Well, I have to check the all-important position size calculator. So guys, if you don't already have this favorited in your Forex folder, I strongly recommend you do so. All you need to do is go on myfxbook.com. I'll start from scratch. Hover the mouse on the home button, so you don't need to press anything, just put the mouse there. Okay, find Forex calculators. I need to move the chat box. Find Forex calculators, and there it is, the position size calculator. Now this position size calculator is going to let me know in advance how much I'm willing to risk. So the trade is Euro USD. My account is in Euro. Let's imagine, for the sake of argument, that my account balance is 1,000 euro. Okay, I only want to risk 2% of my account. So within the Innovators Club, you may have heard us talk about this, you may have heard the educators talk about this, but we don't like to risk more than 2%, maximum 3%. Of course, it's up to you. Yeah, we're not financial advisors, we don't hold your hand that much, but this is what we recommend. Now, am I saying you should risk 2%? No, you might want to risk 1% or 0.5%. But my strong recommendation is don't risk more than 2%. Now, how do I know that I'm only going to risk 2% with that trade? This is the important factor. So I have my currency pair, my account balance is in euro, this is my account size, and I only want to risk 2%. I need to know the stop loss of that trade. So let's go back to the trade. The stop loss is 20.3 pips. So I just put 20.3 pips. And now I calculate. So look, it's telling me that if I only want to risk 20 euro, remember that 20 euro is 2% of 1,000. If I only want to risk 20 euro, this should be my lot size. Why does this matter? Because the lot size, as you've no doubt learned from the academy, will determine the value in euro or dollar terms of each pip. So in this case, with a lot size of 0.12, 20.3 pips equals 20 euro. Look at what happens if I decide to change the risk to reward ratio, the risk percentage to 5%. So I've left everything the same. I've still got 1,000 euro in my account. The stop loss is still 20 pips, but now the risk in percent is 5%. Look what happens. So now I'm willing to risk 50 euro, and my lot size has also grown with it. Does that make sense, guys? Can you drop a yes or okay in the chat just to make sure you're following? Very good. So it is really important, guys, before you take a trade, you need to know what your stop loss is. And this is something crucial, yeah? No stop loss, and you can tattoo this on your brain. No stop loss equals no trade. Because unless you know what your stop loss is, you don't know what lot size you should use if you're only willing to risk a certain percentage of your account. There's no way for you to calculate the lot size unless you know what your stop loss is going to be. I mean, of course, there are ways, it's a bit more advanced, but as a beginner trader, it is very important that you get into this system of first identifying your trade, okay? Then identifying how many pips your stop loss is, and then coming to the position size calculator and putting in all the details, saying you only want to risk 2%, for example, to get the right stop loss. And like this, in this way, guys, you know in advance how much you're willing to risk and how much you stand to gain. Because our gain here was 2, easy calculation to make. But if the risk to reward ratio was like 2.74, all you need to do is multiply 20 euro, which is what you're willing to lose, by 2.74. But if you've already decided that for all week you'll take 0.05, does that mean you don't use the position size calculator? So, good question. Now, if you decided you're going to trade with a specific lot size for the whole week, the advice I gave you in particular was this advice, first of all, only works if your stop loss is around 20 pips. Okay, let's please underline this point. There are some trades out there that you could take yourself or from someone else that might have a stop loss of 65 pips, okay, and a take profit of 147 pips. Can you use the same lot size all week? In that case, no, you're going to have to divide it by 3 at least. So the tip I gave you about using the same lot size for 5 days in a row is assuming that your stop loss is around 20 pips. Okay, so there are some strategies out there. This isn't a strategy session, this is a basic session, but there are some strategies out there where the stop loss is always 10 pips, or the stop loss is always 25 pips. I'm not going to get into that, but in such a case, you can use a static lot size for the whole week. Right. Guys, any questions on this? So I've shown you now. I'll come back to TradingView and show you how to use it properly in a moment. But for now, I just want to highlight the point that we first identify what a trade is going to look like. We make sure that the risk to reward ratio is good enough, depending on the strategy you use. Okay. We identify the stop loss in pips. We open our position size calculator, find the currency pair. In this case, it was Euro USD, but you have all sorts of currency pairs here. Okay. Your account balance currency, your account size in euro, your risk percentage, and the stop loss, and then you get your lot size. Once you have your lot size, you can now enter the trade. So far, so good. Can I see some yeses in the chat? Great. Okay, so now we're going to jump to how to do this. How do we enter trades using Metatrader? So we know the stop loss, we know the, am I seeing the meeting? Yes. Yeah. Share screen. This is my demo account specifically for our lesson today. And I want to show you this. So let's say we're going to take this trade, okay, on Euro USD. So I have pushed Euro USD and I click on new order. Okay. My lot size we saw from the position size calculator is 0.12. And I immediately press sell. Pay attention to what I'm about to say, guys. This is really important. Notice that I haven't put in a stop loss or a take profit yet. Why? Because as beginners, I want you to focus on one thing at a time, but at the same time, you should also try to get the best possible entry. So listen to what I'm saying now. Listen to what I'm saying now. When you enter a trade, there are a number of things that you need to figure out. You need to figure out the lot size. You need to insert, sorry, not figure out, you need to insert the lot size, you need to insert the position, you need to insert the stop loss, and you need to insert the take profit. Now, this can be confusing and overwhelming if you're a beginner. But doing this my way will help you get the best possible entry and will also reduce the possibility of making mistakes. So what have I done? I've entered the trade, I entered the lot size, and I pressed sell. Now I can press and hold the trade, click on modify order, and I can put in the stop loss, and I can put in the take profit. And I click modify. And now my trade is active, and I have a stop loss, and I have a take profit. Does that make sense? Actually, I can't see the chat, so if you're saying it, yes, okay, good. The reason I give you this tip is just so you don't make mistakes. I mean, I can tell you through experience, okay, I've made this mistake in the past. I wanted to put in the stop loss, take profit, and lot size all at the same time. I got something really wrong. And instead of using a lot size of 0.3, I used a lot size of 3. And immediately my account was in heavy drawdown because of the spread. It was incidentally on USD HUF, that's the US dollar and Hungarian forint, which is an exotic pair. So the spread on that was huge to begin with. And anyway, lesson learned. Now, that is that brings to a close the first part of today's training, which was counting pips and calculating lot size. Now, as you can see on screen, I opened two trades just to illustrate something to you. So I have a US 30 sell and a US 30 buy. I only did this because of what I want to show you next. So let's imagine that you have a trade in profit like this one. Okay? Now, it hasn't yet reached its take profit target. Let's put in a take profit target of 35,000. Okay? It hasn't reached it yet, but I want to close partials. This is something you may hear during a session with an educator that tell you, okay, guys, close partials and move your stop loss to entry. So let's look at the trade together for a moment. So this is what the trade looks like. Okay, the green line is the price at which we entered. The red line at the bottom is the stop loss. You can see SL. And the red line at the very top is the take profit. So we've been given advice. Yeah, we've been given a tip to protect our trade and move stop losses to break even. So how do we do this? First of all, we press and hold the trade. Okay, we click on modify order. The first thing we want to do is move our stop loss to break even. Now, how do we do this? Look at the very, am I there, guys? Can you hear me?
Yeah, we can hear you.
Okay, sorry. I thought I got disconnected again. For some reason, my phone isn't changing screen. So
that's what I said. I thought something was wrong.
yeah, which is a pity. Let me get back on this. So Zoom. Yeah, I got disconnected, but no problem. Coming back in. Share screen. Stop share. Share screen. Screen. Here we go. So I was saying, I want to close a trade. Damn it, it was in such a good place earlier. I was like 500 up. So let's look at this trade, okay? I want to close partials and protect my trade. So the first thing I'm going to do is this, guys. Take a look at this number I'm circling at the very top of my screen. This is the price at which I entered the trade. So if I want to bring my
sorry, Clive,
yeah?
At least I cannot see that number. I see that you are circling something, but I do not see the number. It's covered by... no, I do see the number.
Okay,
all
good.
Right.
So it's 33,805.92. This is the price at which I entered the trade. So when we talk about protecting your trade or moving stop loss to entry, all we're doing is this. We're putting our stop loss to the same price at which we entered the trade. This means that if my stop loss is hit, the worst thing that happens is I make no money, but I can't lose money. Does that make sense, guys?
Yeah.
Very good. So now, what if I want to take some profits out? This is the next important thing. This is something called taking partials. So I press and hold the trade, or rather I press and hold the trade, and I click on close order. Now I want you to pay attention to two things. One, the lot size at the top, and this close with profit at the bottom. Do you see it? So what do I do if I want to take partials? I simply do this. So what have I done? I've cashed out some money. You can see it here. I've cashed out some money here. So that's profit that no one can take from me. And I'm still leaving half the trade open. So how did I do this? Well, when I went on close order, I didn't simply press close with profit. No, I first went up here and I lowered my lot size. So notice that you can always lower the lot size, but you can't increase the lot size. So when somebody or when you decide to take partials, what you're doing is you're closing part of your position, but not all of it. So again, to give you some understanding as to why this is useful, look at how my trade now has shrunk. So when I cashed out half the trade, I cashed out 252 euro. Hypothetically, I should have 252 here. But at some point, I was down to 47 euro. But now it's going up again. It doesn't make any difference to me because now this trade is absolutely risk-free. Notice that my stop loss and my entry price are exactly the same. So the worst thing that can happen to me now is I make 252 euro. The best thing that can happen to me now is I make even more. So if I decide to close this trade, there. and I've made 767 euro. Of course, had I not closed the trades and closed all of it now, I would have made much more. I would have made 514 times 2. But was this a bad idea? No, because this is what you call securing the bag, taking some profits, and making the rest risk-free. Every trader's dream is to have a trade in a position where you can put it risk-free. Does that make sense? So guys, please don't unmute yourselves because I'm still recording, but if you have any questions and so on, please drop them in the chat and I'll address them. Questions, comments, anything like that, and I will address them. Now, someone said, I don't see the red and green lines on my iPhone. I'm afraid I don't know what it looks like on iPhone, but just know that TradingView on your phone is customizable, okay? TradingView on your phone is customizable. If you fool around with the settings, you can change everything, the colors of the bars, the colors of the entry price and spread. So feel free to fool around with that. Now, question, are there situations when it's better to take your profits and run rather than wait to be paid? What are the signs that we should grab the profits quickly? Very good question. So if you see a trade rushing to take profit, I mean, look, as a trader, as soon as I deem it safe, I put my trade risk-free. So this is a point on trade management that I'll share with you. Nothing I say is absolute, okay? It will completely depend on the sort of trading strategy you use, but some pointers, you could manage your trade this way. You could choose to move your stop loss to entry in one of these situations. Let's say you're risking 20 pips, so your stop loss is 20 pips. If you're risking 20 pips and your trade is now 20 pips in profit, so your risk to reward ratio is 1-to-1, that might indeed be a good time to make your trade risk-free. One. Another suggestion would be, let's say you have a 20 pip stop loss and a 60 pip take profit. Once your trade is 30 pips in profit, so you're halfway to your take profit, you could potentially move your stop loss to entry. Now, these are just two suggestions. It will really depend on the strategy you use to determine which one works best. But those are just two ideas. Now, that said, if we have a trade rushing in one direction, in all likelihood, that spike was not caused in a vacuum. Yeah, in all likelihood, that spike was caused because of news or because of market manipulation. Now, personally, and I say personally, okay, if I have a trade and it's 5 pips away from profit, I personally close. And I keep emphasizing personally because that's my own decision. But I've been trading for almost 2 years, and I've had some very frustrating moments where a trade was 3 pips from take profit and then suddenly reversed and went completely the wrong way and hit my stop loss. So, you know, if I'm 3 to 5 pips away from take profit and I happen to be watching the trade, I'll take it. You know, I can keep looking at it and see, oh, okay, I was right and I missed out on 3 pips, big deal. I caught 70. So I hope that makes sense, guys. So if that does, I think the next point on our agenda is TradingView. So let's take a look at that. So I promised you a little basic session on TradingView. Again, guys, I invite you to look this up on your own. watch tutorials and so on. What I'm teaching you now are purely the basics, but they should be enough for you to decide to start using TradingView. So first things first, the most important tool on TradingView is this. It's the tool that determines your trade. You find it over here, okay? Don't just click on this. Click on the little arrow to the right of it. There. Open up the menu. Now you have a long position if you're buying and a short position if you're selling. So let's imagine we're buying. So I click on long, okay? And I want to drop it where the current market price is at. And current market price is this red horizontal line. So let's say I want to enter this trade for a buy, okay? I now have this square here and a square here. I'll bring this square down for my stop loss, and I'll press and hold the square up for my take profit. Okay, I now know, then you can click anywhere else. I now know just by hovering my mouse on this that I've got a risk to reward ratio of 2.61, that I have a stop loss of 44 pips and a take profit of 115 pips. It couldn't be simpler. Now that I have my stop loss of 44 pips, I go to my position size calculator and do what I did earlier, okay? So I can calculate my lot size. Once I have my lot size, in fact, let's do it. Let's do some revision. So this is a 44.1 pip stop loss on Euro USD. So Euro USD, I've got a 1,000 euro account, 2% risk. What was the stop loss? 44.1. 44.1. What happens to my lot size? Well, it's going to shrink. Why? Because I'm still only risking 20 euro, but this time it's a 44 pip stop loss. So my lot size has to shrink. What if my stop loss was only 10 pips? Well, then my lot size would grow. So I really, really hope that makes sense to you guys. So anyway, now I've calculated my lot size because I have a stop loss of 44.1 pips. I open my Metatrader. I press, I change my lot size to 0.05 or 0.06 because you're only allowed 2 numbers after the decimal point, at which point I press buy. I then go back to my trade, click modify, put in the stop loss. Where is the stop loss? The stop loss is right here in red, 1.21362. And I put in the take profit, which is up here in green, 1.22956. Is that, was that easy to understand, guys, or should I explain it one last time?
No, it's okay.
Okay, good. Now, with regard to trade management, the free version of TradingView will allow you to have a few alerts a day. I believe it's two per day. Of course, once one alert hits, you can delete it and use another one. But why do we set alerts? So what did I say earlier? This is a trade of 115 pips. Okay. For the sake of argument, let's just make it easier to divide because I'm shit at maths. I told you. Well, I told some of you. Whatever. Let's say that this is 100. Okay. Let's say that this is 100 pip take profit. So one thing I like to do is set an alert. My entry price is right here, 1.21803. It's the one in gray. My take profit is 100 pips away. So if I tell you I want to set an alert for the halfway mark, what would that be?
Minus 50.
Plus 50. 80 plus 50,
What do you say?
or minus 50 from take profit. So this red line that I just dropped, and look at how I dropped it. I went here, I clicked on trendline tools, and I clicked on horizontal line. Okay, and I dropped this line over here. Now, what do I do with this line? When you drop the line, this menu shows up. First of all, you can correct it and make it really precise. So 22,300. So now it's exactly at the 50 mark. Okay. And then you can click on this bell here, on this clock here, and add an alert. And I could say, for example, Euro USD crossing the line up only once. So as soon as price touches that line, I can set myself an alert telling me move stop loss to entry price. Another thing you might see is BE, which is break even. It means exactly the same thing. Okay, so over here, and then I create the alert, and now we get a little clock over there. So if and when price comes up here, even if it just comes up there for a minute, that alert is going to go off. I'm going to receive the alert on my phone or on my desktop, and then that's my signal to move my stop loss to entry. How do I do that? I go to my Metatrader 4 app, I press and hold the trade, I click on modify, I look at the price at the very top in blue, which is my entry price, and I put in the same digits in my stop loss. And now my trade is risk-free. What can happen to you when a trade is risk-free? Well, first of all, when your trade is halfway to take profit, you could always close part of the trade, take partials, like I showed you earlier. So in this case, you've banked some money. The worst thing that can happen to you now is that price comes back down and stops you out at entry. But you can't lose money. You've only made money. That's scenario one. Scenario two is it continues all the way to take profit, and you make more money. Now, other things you can use with TradingView. I mean, believe me, guys, this is the Lamborghini of market analytics. Okay, there's nothing, in my opinion, there's nothing better than this. The reason I don't have Metatrader on my desktop is because the user interface is so it makes my eyes bleed, whereas TradingView is much better. Now you have a number of tools here. Again, this is a session just to teach you how to use TradingView and get up and running. But then fool around with it yourself. The important things for you to remember, either when watching someone else analyzing the market, or when you yourself do it, is the following: that you will have entry price is the number, the digits you have here that are aligned with this line here. Okay, your stop loss is in red down here, and your take profit is in green up there. Now, TradingView, again, is completely free. There is a pro account. I use the pro account because it costs, I think it's like $170 a year. And in my case, I need it, okay, because I need more than 2 alerts a day. I have several. The good thing with TradingView is that you can have your chart set up for different strategies. So take a look at all of these strategies. Each strategy has a different chart layout. Now, again, you're beginners, but I just want to show you that depending on which strategy you'll use, you'll have different chart setups. And TradingView makes that possible. So guys, we have covered we have covered everything. We've covered how to count pips and calculating lot size. I've shown you how to enter trades on Metatrader 4. I've shown you how to close partials, and I've shown you how to move your stop loss to entry. I've shown you how to use TradingView, how to enter a long position and a short position, and I've shown you how to set alerts. At this point, I'm going to stop recording, but for the benefit of those of you on this call,